thing they give you a loan or they like provide money for you to get a loan, but it's another thing for us to help you understand how you build that pro forma so that it makes sense for a lender to be able to do it. The banks are profit driven, right? So they're going to go where the money is, and CDFIs are really going to go where the work needs to be done. Honestly, man, I think sometimes we think too small. I really think that, like, if I could just find somebody to give me, $100,000, I can get this deal done. No, when I go to the bank, I really need, $500,000. But if I can just give them to give me 50,000, I'll get it started. One, if you're doing stuff like that, whoever you're talking to is not going to really believe you know what you're doing, because whatever you're doing should cost more. But the amount of time that we spend doing those little projects is the same amount of time that we spend doing bigger projects. It's a fact that in the banking world, it's way easier for you to go get a $5 million loan than it is a $500,000 loan. And it don't seem like that makes sense, right? Because it's less money, but it also means there's less room for risk. Don't be afraid to joint venture and or find a mentor, even if that mentor costs a little bit of money, right? You can make 100% of this $100,000 you're making, or you can figure out how to make 75% of $1 million and, help somebody else make some money too. So
this is the Commercial Builders Network, where trust is restored, power is reclaimed, and legacy is built. Let's get to work. Hello, beautiful people, and welcome to another episode of the Commercial Builders Network. My name is Nisha Reed, and I'm your host, and today we have the amazing Tommy Lester. He is the Atlanta Market Lead for Capital Impact Partners and the President of Swann Development Partners. How are you doing today, Tommy?
I'm doing great, Tanisha. How are you?
I am amazing. Good to have you here.
Thank you for having me. I've been watching your work, so I'm excited to be included and to be one of the voices that you're listening to.
Exciting. I appreciate your support. So can you tell the people who you are and what are you known for?
Well, wow, a lot of people say a lot of different things, but again, you said it already. My name is Tommy Lester. My day job is Atlanta Market Lead for Capital Impact Partners, which is a national CDFI that's based in Washington, D.C., but we have offices across the country. And what we do, a CDFI is a Certified Development Financial Institution. And so really our goal is to help build communities by providing resources, namely in the name of either money, loans, or through technical assistance by helping people really just be able to build their businesses, whether it's small business owners and then really particularly developers. And so that's kind of my day job. My night job is Swann Development Partners. I develop real estate, so I've been a real estate investor for more than 25 years. Really just about the same amount of time I've been lending money on real estate, I've been investing in real estate myself. So Swann Development Partners, we own properties. We also do consulting for other developers and other investors to help them understand how to find funds for their property. So that's me in a nutshell. I think my day job and my night job are like two different sides of the table. On the one side, I'm passing out money. On the other side, I'm trying to collect money. But either way, it's all about building communities through real estate.
Awesome. So with your 20 years of experience in both, you started from Wachovia. I don't even think that bank existed. Was that Wells Fargo now?
Yeah, it's Wells Fargo now.
BB&T, to PNC, and now with Capital Impact Partners. What has driven you to help these communities out, to build? Where's the passion and the heart behind it come from?
I think it comes from a couple of different ways, and so I did start my banking career. It was actually a bank called First Union, which became Wachovia, which then became Wells Fargo. So that's how far back I go. A long time. But even before joining the bank, I worked for a company called NACA, which was the Neighborhood Assistance Corporation of America. And that organization helps low to moderate income people buy their first homes. And for me, I grew up in I call it middle class family. And, it's hard to say middle class when you're Black because, everything is kind of lower tiered anyway. But, I come from a family of people that always owned homes. And so for me, that was kind of taken for granted that would happen. But when I went to work for NACA and started looking at other stuff, I realized that, people have challenges and people, they work hard. They, they try to accomplish American dream, but it can be hard partly because one, it costs money, but then two, because a lot of people don't always get the access to education and knowledge and just the resources that are involved. So I realized really early in my career that I could be somebody who could, provide the resources and understand like the business world and the finance world and, what makes banks go, but also really be able to, help the people in the community understand that at the same time. And so really just making capital and real estate accessible, I think, is something I learned early on. And, you know, over the years, I've just seen what real estate can do for wealth, as well as what entrepreneurship can do for wealth versus, you know, just working your job. And so it's been a passion of mine to really kind of bridge the two and say, okay, hey, I understand both sides of the table and I understand how to talk to people across all different spectrums. And so here, let me help fill that gap and make sure that everybody can take advantage of the opportunities that some people have always had.
Awesome, awesome. I actually had got NACA certified when I was using
Really?
I didn't really use my license, but I got it.
Sure.
So I said that you had helped over 150 first-time homeowners. That is amazing. Shout
Mhm.
outs to you,
Thank
sir.
thank you.
What is the mindset shift that had to happen during that when you're working with these different clients?
Um, so again, it's really weird because that was so early in my career that helping people get real estate first was what I learned on, right? And so for me, it was okay, these are just regular people. They have jobs, they do different things, they just don't understand this finance piece. And then as far as, you know, you have to understand credit and how your credit works and make sure you haven't done stuff. And I guess maybe I also understood that, hey, some people's credit card bills get run up because of different reasons. That doesn't make them a bad person. So how do you kind of build that? And it's actually interesting because as NACA was a nonprofit organization, so I'm a kid and I'm working there, and it's great to be working for a nonprofit organization, but they kind of made me nonprofit as well. So, you know, there wasn't this like opportunity to earn bonuses and commissions. And I actually went to work for the bank. I took a job at First Union, which was one of the lenders for NACA at the time. And so, you know, your question was about the mindset shift, and it was interesting because you had this one organization who was putting capital out in the market for the sake of helping people. And I guess you would say both organizations were, but one organization was way more driven on profit. How much money do I make? So can you um, sell these people these particular products that, you know, they should be good for them and they are good for some people, but at the end of the day, it's about how much can we sell versus how much can we help people. And so, you know, I think I've experienced again that, and as I got, let's say, towards the tail end of my career, because I stopped working in banking several years ago after about 20 years total, because that's about 25 years ago. Um, I was drawn back to the other side of going back to helping people in the community understand how to build their wealth in their own community and own their own community. And I was just able to take my experiences from having sat on that bank side, which is more, you know, risk averse, but makes more strategic decisions, and take that and bring it back to the communities.
Awesome, awesome. So for me, I guess when I did have my license, part of the reason why I didn't have a lot of money or make any money, I was always going for the underdog. I wanted to help inspire the people. First time homebuyers, man, that is the toughest market to hit because as soon as one
Right.
thing go wrong, they're like, I can just go rent this apartment, right?
Exactly.
So how
Exactly.
do you build trust with these people, not just on the home ownership side, but for first time people who are looking to become developers and to first try and step out there and see if it's even, worth
hmm
exploring the idea of it.
hmm
How do you build trust with your clients?
I think the first way to build trust is to be an example and show examples, right? And so I can tell my story, and you know, I think my story is uh it's fairly unique, but going through NACA literally, I could say, changed the trajectory of my life because while I was working at NACA, and this was, you know, I'd had a couple of jobs out of college, but this was my first salary job. Um, Again, I was nonprofit, so my salary level was beneath the level that you needed to qualify in order to go through the program. So I literally went through the NACA program while I worked at NACA, got qualified to buy my first piece of real estate. Um, and because residential real estate goes up to 4 units, the first piece of property I bought was a quadruplex. And that was just somebody mentioned it to me. I'm still learning real estate. I don't know, but they're like, you're single. You're gonna go buy a house. Why not go buy something where you could generate rent from at
Right.
the same time? And so I bought that, lived in 1 unit, rented 3 units out. You know, they basically paid enough for to cover my mortgage, plus gave me a little extra money. And then I also had a job at the same time. So I can tell that story of having one been there in the beginning and seeing where real estate can literally change your life. But then too, some of that mistrust comes from a lack of exposure to information and misinformation. And, the lack of exposure from information is really that idea, the fact that there is a disconnect between the everyday person who wants to who just has a basic dream of accomplishing a house, buying a house or something, like this whole corporate speak on how to make it happen. So I think that's the miscommunication, or rather the lack of communication. And the miscommunication can come because not all real estate agents would be like you, right? So some of them are going to go and shoot for the moon and find this person who can barely qualify for a house, and you're going to push the limits up as far as you can and put them in a situation where they can't afford to keep that house. And if they lose it, then their cousin, mama, auntie, nephew, whoever else was looking at buying a house is going to say, well, no point in me buying a house because they lost their house. You might as well just keep renting. And so I think, being an example to people and then just helping educate and, provide knowledge is really the best way to help overcome any of that credibility issues. And then just remember that your reputation is important because people talk to other people. So, be mindful of what you do because somebody else is telling. If you're going to, just keep your promise and keep your word, I think.
I love that. I love that. So, dialing into, I guess, kind of like your product and so a sense of what you do in your day-to-day job.
Mhm.
Can you explain what capital stacking is and why it's important for new developers to understand this term?
Sure.
And what is it?
Sure. Capital stack is, and everybody uses it, and it's really not that complex. It's really how do you pay for something, right? And so if you're going out to dinner, let's say your capital stack, if you've got cash, it's, your cash that you use to pay for this, it may be some credit because you may put on credit card, but either way you're paying for it. And so in real estate development, particularly when you think about capital stack is how do I pay this 100% of this bill? So if I've got something that costs, and I'm gonna use just round figures because it's way easier for me. Typically on a commercial product, if you're going to buy a, commercial piece of property, an apartment complex, a shopping center, something to that effect, banks would typically loan you 75 or 65 to 75% of whatever it costs for you to buy that. So if you're buying something at $1 million, they'll loan you somewhere between $650 and $750,000. Well, the first part of your capital stack is that debt, right? But you still got to come up with your other 25 to 35%. And the easiest way most of us would think of is, let me put my cash. So I got a loan for this amount. How much is my down payment? How much cash do I have to put down? And so that's really how you feel your capital stack is your own cash, which is really your equity into it. So even if you're talking to somebody buying a house, they're taking cash, they're making a deposit, that's their equity into the deal. And then typically if you're buying a house, banks give you way more than 65 to 70%. They give you up to like 90 or 95%. So that debt is that. So your whole capital stack is your money that you put in plus the debt. When you start doing bigger projects, when you're looking at commercial projects, it can be harder for you as the developer or you as the entrepreneur to have that bigger 25 to 35%, right? And so your capital stack in that sense is still most easily made up of how much money you can borrow and how much cash you have, which is your equity and debt. But because we don't always have that money, there's sometimes a gap. And so then your capital stack becomes what else is included in that. And that may be, depending on what your business is and your development is, it may be some grants. It may be some type of tax incentives that have been established in order to encourage development. That capital stack may include equity, but it's not just your equity. It may be like, did you have to go out and borrow from friends and family and have them put some money in? Or is there somebody else that has money that they could put in? And now all of those people in your capital stack. So your capital stack is, how do you get to 100% of whatever your project costs?
Awesome, awesome. And what do you recommend, I guess, again, new developer, might not have a whole lot of money coming in.
Right, right.
Friends and family, they ain't got it either.
At all.
At
Right.
all. Okay, I know my friends
Yeah.
and family don't.
Yeah.
That's why I'm making friends like you now, Tommy,
That's
because
a smart way.
I need to No
Yeah.
problem.
Yeah.
So, where do they go to bridge this gap? Because, a lot of people are selling online that you don't have to bring any money to the table. There's ways of getting into the industry, different ways without bringing any money to the table. I know some people might do like syndications and stuff like
Mhm.
that and may work the deal. What are some
Mhm.
creative ways to get in outside of just
Just your
friends,
own money and your
just
friends
your
and
own
family.
money?
And your
Yeah.
friends and family, and let me start by saying that's funny that you say that. One of my another company that I have that's not really my main company, but it's called Startup BFF. And it was for startups to help them, but it was the BFF part was really that friends and family piece that a lot of people in our communities miss out on. So because we don't necessarily have this uncle or this father or this granddad that we can call and be like, hey, I've got this great idea. Will you put some money into it? Right? That we just don't have
Mhm.
that. And even if we do have friends and family that may have that kind of money, they typically don't have a history of investing in projects and knowing what makes sense in investing. Then that's where it starts becoming even more difficult because you hate to have friends and family that you can get money from and then you can't pay the money back like they want it, right? You know what I'm
Yeah.
saying? And I say like they
Mhm.
want it because you just may have different expectations of when it gets paid back or how much they get paid back. So
Mhm.
I think that's really important. I think that's a challenge that most entrepreneurs, real estate developers, early stage entrepreneurs all kind of face. And so I think what you have to do if you're looking at it is one, again, figure out what you're trying to do. Figure out who a lender is if what you're doing is makes sense for a lender, and then how much money you have to come up with. Yeah, you can realistically, first of all, you should always have some money to put into a deal. If you don't have some money to put into a deal, then that makes me a little bit wary about your ability to do that deal, for one, because you haven't just been able to save up some money. And then two, you don't have any skin in the game, so it's easier for you to walk away. And so anybody that's saying, hey, we can do a whole project and I don't have to put anything in and we're just going to take the money from other places, that's something I'd be really hesitant to deal with.
So
Um,
what's the minimum that you would say, at least you tried?
I mean, an easy number is going back to those percentages amounts that I was saying. Like the
Yeah.
bank may give you 65%, and you need to come up with 35%, somewhere between one. Let me change it. If you're an experienced developer, you can get away with 1 to 5%. If you're less experienced, you probably need to have 10 to 15% of that yourself somewhere, somehow. And that may be in the form of some equity that you've built up in some other real estate. That may be in the form of doing what you just mentioned, which is a syndication. And for people that aren't clear on the syndication, it's basically raising money from people for a particular project. You have money coming from different sources and they're investing in your project. And so that is a way to go. That is, I think there's pluses and minuses to all of it and challenges to all of it, but syndications are a way to go. If you're a developer and you're kind of short on that, think of who else has an interest in whatever it is that you're developing, right? And so sometimes if you're in a city or a community, then that particular community can give you may have grants that are available for your funding. Um, and so I think that's the way to go. I have really, some different thoughts on kind of access to credit, and that's probably where this might make sense to take this conversation in a sense, right? So, as we go out and try to fund projects, and whether it's our own business or whether it's going out and doing a development, a lot of times people will talk about the lack of access to credit, or they need access to credit, right? Which is they need access to the money, which we all do. But I think there's two sides to the access to credit piece. The one side is, where do you get the money from, right? And so if you're doing a project, I don't care what kind of project it is, real estate project, your own business, you have to identify who has an interest in funding that type of project. And I'll tell people all the time, a great example is, if you're flipping houses, Bank of America doesn't give loans to people that want to flip a house. That's just not what they do. So if you have a great application, you go into Bank of America, they're going to turn you down. That doesn't mean that you didn't have a good deal.
Mhm.
That means you tried to access capital at the wrong place. And so one is identifying, the right sources of capital for you. But the two, I think, is internal for those business owners or developers, which is are you in position to access capital, right? So what is your strategy and what is your plan? How do I know I'm going to get paid back my money? How can you show me other than, you've got this pretty picture and you love this neighborhood and you've got this great idea of what the neighborhood is missing. That's really cool, but can you put it on paper and show me again how it's going to pay for itself? What real impact is it going to have? And a lot of times people they have it in their head, but they won't put it on paper and they just want to go somewhere and be like, hey guys, can you give me some money? Even going to your friends and family, hey, can you give me some money? I got this great idea. Well, going back to your earlier question about credibility is, have you put in the work to show why somebody should fund this project instead of you figuring out how to fund it all by yourself?
Awesome. Awesome. So, what is something that a lot of people overlook when it comes to getting approved for loans, or a mistake that's commonly made from people looking to get funding?
I think a lot of different people, depending on who you would talk to, would answer that question differently. Somebody might say, like I have friends that'll talk about, well, as a business owner, you don't want to show all of your income on your taxes. So then when it's time for somebody to look at your tax returns, you're not showing the income. And that's an absolute fact. And so maybe to that end, what people could do better is really just spending that time up front with experts that support them. So whether that's a CPA or an attorney or even your insurance agent, I think bringing people in too late sometimes is one of the things that I would say is people's problems. They wait until it's a problem to say, let me go find an attorney, right? Instead of just spending a little bit money on an attorney or spending money on the CPA. So I think that's important. Then I think as you get into bigger deals, really understanding like your legal agreements and both like what you're signing at if you're borrowing money and what you're signing if you're going into business with somebody. I think all of those documents are important. Um, but yeah, I think if I was to tell a business, if I didn't know somebody's situation and I didn't know what they wanted to do, and they tell me, Tommy, I got an idea, I want to go get funding. What's the best way to go get funding? I'm going to refer them to what the people in the banking business call the 5 C's of credit. And it's C, just like the letter C. I'm not sure if you've ever heard of that term before, familiar with it
Hmm.
at all. Yeah, I'm
Yeah.
sure. Yeah, if you've done anything, but I think, and it's such a basic concept, but every lender I've ever worked with, every bank, every hard money lender, because I've done it all, right? I've borrowed money from hard money lenders, I've borrowed money from banks, I've done syndications, I borrow from friends and family. Everybody really evaluates loans or evaluates opportunities on the same. And so if you're a developer, if you go and figure out these 5 C's of credit, and before you go talk to anybody, you go through these yourself and say, okay, here's where I stand and here's where my gaps are, and then maybe I can do it a little bit more. So I'll go through those really quickly if we got
Yeah.
time for it, right?
We got time.
Okay. All right. Yeah. And again, this is something I talk about because I think if you just if you look at these 5 things, and they call it a 5-legged stool, with the idea like if you have every one of these things, your stool is going to sit perfectly. You can sit on it, have no problem. If one of those things are missing, you still have 4 legs, and as long as the legs are strong, you're still probably fine. But if you start missing 2 of them, or 3 of them, and they're all short, you're going to get real wobbly and it's going to fall. And so that's how they look at it. The first C is character, right? And so it's really, do you do what you say you're going to do? Have you shown that you're going to pay bills? On the residential side, so if you're helping somebody buy a house or get credit on a house, the easiest way to look at character is their credit score. So Equifax, TransUnion, Experian, whatever that credit score typically tells you whether or not they've done a good job of paying back whatever they said they're going to pay back. And so that's why so many people look at your credit score is what does that say about your character? And then there's other stuff that talks about character, like how long have you had this job? But it's really how do you, measure? So that's the first thing is that person any good? The second thing is, how much capital do you have? So how much money do you actually have to put in? And that's when you really start thinking about, I got this much money in my bank account, I can afford this. Maybe I need to bring in some partners for some equity or something, but how much capital do you actually have to go into the project? The third C is your capacity, right? Which is if you get this loan or you get this investment, where's the money going to come to pay from it? So do you already have enough money coming in that you're going to be able to pay for it, based out of your own salary or your own earnings? Or are you projecting that because of this project and you build this particular thing, now you can get income coming in and that's going to be the source of your capacity to pay the bill, which is where, lenders start looking more closely at projections and performance. It's like, hey, you haven't shown already in the past that you can pay this, so show me that you have a plan to be able to pay it. So that's the capacity side. I think the fourth one is collateral, which we're all really familiar with, right? Which is if for some reason you don't pay us back, how do we get our money back? If you're buying a
Mhm.
car and you get a loan on the car, that car is your collateral. If you're buying a house, um, that house is your collateral if you're going to be living in it. So, if something happens, the bank could come foreclose on it. It starts getting a little bit trickier when you move up into business and development, because this stuff is sometimes worth more than what that individual project is worth, especially if it's under development. And so then it becomes like your collateral, in addition to whatever that project is, might also be your personal home that you have to put up to say, again, if I'm
Mhm.
not able to pay this, you're gonna come back and get it. You can make that face, but it happens, right? It's
Yeah.
you have to guarantee that the loan is gonna
Mhm.
get paid back. And then the fifth C is the conditions, which is something that we don't really have control over. It's what's going on in the market. So,
Mhm.
if I'm coming to you and saying I wanna, I don't know, I want to start a taxi company, and everybody's catching Uber and everybody's catching Lyft, where your idea for a taxi company might be great, but I really don't think the market conditions support you doing that as a business, right?
Mhm.
Versus if the market conditions are everybody's doing Lyft and everybody's doing Uber, and you want to go buy a fleet of cars in order to be able to do Uber, then maybe it makes sense because that market condition supports where you are. So I think if when people are going to apply for loan, when people are going to talk to lenders, and I say apply for loans, but I really should be saying funders, right? Because whether it's somebody giving you a loan or somebody putting equity or even somebody putting a grant into it, because even people that give grants want to know that that money is going to go into a good use and not just be thrown away, and even maybe get recouped so it goes somewhere else. So character, capacity, capital, collateral, and the conditions are what I would tell every business owner, entrepreneur, developer that wants to go and apply for money. And the more you can answer those questions up front, the first time you have that meeting, so you've already done your research, the way more likely it is for somebody to approve you or to work with you to help you fill the gaps in any of those areas.
Awesome, awesome. Now, I know you're currently specializing in CDFIs. When it
Mhm.
comes to these development projects, why is it more advantageous for me to go after a CDFI over maybe a SBA 7A or any other type of funding?
Okay, yeah, so that's a great question. So, SBA 7A and SBA 504 are very specific type projects, and they are really for our products. They're for business owners to buy real estate and invest in the real estate that they're going to operate their business out of. So, if you're a I don't know, if you're a car repair shop, or you're a mechanic and you repair cars and you want your own shop, then you're gonna actually be operating out of that real estate, and so 504 may come and be able to fund that for you. Um, the SBA loans aren't going to fund a development. So if by that same token you say, "Hey, I'm a builder, or even I'm a church, or I'm somebody else, and I want to build this piece of real estate," the SBA isn't going to do it because SBA is Small Business Administration, right? So they're designed to help the small business, and for some reason, development projects aren't necessarily considered small business. So you would go get a different type of loan. But to answer your question as to why somebody would choose a CDFI versus some other lenders is, one is that we are mission driven organizations. So we tend to be a little bit more aggressive as in the form of like, what's your box that you work in? If you go to some of these major banks, again, a Bank of America, somebody, they have a very specific box, and you're either going to fit into it or you're not. We're not
Mhm.
necessarily going to do that, because what we're doing is more about building communities. And so we're going to look at the project as its impact on whatever that community is. And that may allow us to give some more favorable terms, some longer term, some lower interest rates, or something to that effect. And then CDFIs also, just by their nature, do what we call a lot of technical assistance, which is training. So it's one thing to give you a loan or to like provide money for you to get a loan, but it's another thing for us to help you understand how you build that pro forma so that it makes sense for a lender to be able to do it. Or once you get the loan, how do you know, you're a plumber, you know plumbing very well, but you don't know how to, work your tax returns and make it favorable for your business, or go out and get a working line of capital, right? So we provide education as well as the funding. So I think that's the important roles of CDFIs. And then most CDFIs are community based, so they are literally in the community they're working in, and they got more of a pulse on it. And going back to my very beginning story when I talked about moving from NACA to going to the banks are profit driven, right? So they're going to go where the money is, and CDFIs are really going to go where the work needs to be done.
Awesome. And with the education piece, is it that you have to be a client already getting funding from them to get the education? Is there a price that's is for the education? How does that work?
So I think that's a great question. I think it really just ranges, right? So it depends on what you do and where you are. Capital impact as a CDFI is only limited to certain cities, right? So we're in Atlanta, DC, Detroit, Dallas, LA, the Bay Area. Then we do some work in Cleveland, Ohio a little bit, but we're very much targeted in those particular areas, right? And so that's the first thing is, where are you and what's in your area? And then also what's your specialty, right? So we really specialize. Our trainings are mostly around real estate developers and real estate development and some small business. So we do that. But there's other organizations, small business development, corporations and other people that provide technical assistance. Most places will provide technical assistance for free because they get funding from other agencies, whether it's the state or the federal that provides some money, or sometimes in the case of CDFIs, we may get our funding from banks like Wells Fargo, JP Morgan Chase, who don't have the infrastructure themselves to provide that training. And again, as their day-to-day work is more along that, that profit transactional stuff, where they'll provide funding for us to be able to do it. So the majority of trainings are free. One that I've been really excited about is a cohort that we recently wrapped up in Atlanta, and we're getting ready to launch another one coming up in March. And it's a cohort for emerging developers. So it's the idea that you have people who've been involved in real estate who might have gotten into it like myself, where they picked up a duplex or a quadruplex, and they may have flipped a house or something, or may have even built a house, but they've traditionally filled their capital stack with just that. Where can I get the debt, which is either a bank or a hard money lender, and then how much money can I put out of my own pocket? How can I do it? Which is great. It helps people get deals done, but it's really hard for developers to scale and be able to do bigger projects and more projects. So we spend a lot of time helping people understand that capital stack. So our cohort for developers is a 9-month program where we meet twice a month for 4 hours a day each time, and we do a range of things. So we spend time going through, like, what does a performer look like? What do projections look like? How does it impact your loan? So we're doing that on the one hand, but at the same time we're also bringing in experts that are expert developers who may be more senior, have done some other deals, or who play in other parts of the development process. So I don't know, somebody that does sustainable energy or something, but bringing in those people to provide access to those developers as they continue to grow, and then also provide funders. So we like to say that we help people with their financial capital, their social capital, and then their knowledge capital. So we provide education about the actual stuff. We provide a place for networking and mentoring, because I think in whether it's developers, my first thought was in this community, but it really doesn't matter which community I say, right? Whether it's developers in Atlanta, or developers in the DMV, or it's entrepreneurs. It's all about the more access you have to mentors and people that have done it before, the more likely you are to achieve your own success. So we're really structured and make sure we bring those people together. So that's the type of training that we do through that particular program. But there are so many different programs. There's so many great organizations really across the country doing work, that I would say that any of your listeners who are thinking about something is, get on Google and research and say, I want to be a real estate developer in Indianapolis or wherever else, and then see what other programs and trainings are available. And what you'll really find nowadays is that a lot of cities, particular cities that are trying to grow more, these cities are funding these programs. So even if we were charging for it, more than likely your city would pay for you to go through it, because they need local developers. They need community-based developers, people who really understand the community, to come in and get those trainings. Same thing for entrepreneurs. And I can almost use developers and entrepreneurs simultaneously. They do different things, but they're really both kind of building the community and building their own wealth at the same time.
Oh, that's so good. So many nuggets.
Right.
So, so with the, I know that you have worked on some affordable housing projects as well as neighborhood building projects
Mhm.
within your Swann development partners.
Mhm.
What is the project that you're most proud of?
That's interesting. Excuse me. I would say, in general, I'm proud as I drive around Atlanta. I'm a native of the city, and I work with real estate developers. I invest in real estate, but I've also been a business banker, and I've worked with retail companies, and I've worked with healthcare companies, and I can literally drive around communities and be like, "Yes, I financed for that building for that person, and now they're a millionaire," or "I financed
Mm-hmm.
that building for that person, and they have another location." So that's always a good feeling just to really be able to say, hey, I've seen this contribution to the community in the city. But if I had to pick a absolute probably favorite project, it's not necessarily around affordable housing or housing in general. there's a um there's a nonprofit agency here in Atlanta called Raising Expectations. They're a 25 plus year old. Actually, I think they're about to celebrate their 30th anniversary.
Wow.
Nonprofit organization that's dedicated to helping underserved youth and in the most vulnerable communities. And it was founded by two young ladies who were partners almost 30 years ago, and they continue to be partners now. And for a really long time, they provided their after school programming or weekend programming at various schools around Atlanta. So they would look for like the public schools to give them space so that they could have something. And that went on for a really long time. And at some point they got the opportunity, because they were working so hard in the community, to buy a building that can be their headquarters, and so they can be stabilized. They're working with a vulnerable population who isn't who needs stability because they don't necessarily have it at home. And so for me, I was able to help them understand and I was actually serving on the board, so it's not even like this was my job or income producing thing. It's me sitting on the board, but recognizing that this locally based community organization that's doing great stuff in the neighborhood could be displaced because they don't have a permanent place. And on top of that, this neighborhood where they had the opportunity to buy this is one that I call transitioning. People say gentrifying. It's always so much going on with that, but it's a neighborhood that is important, that legacy residents and legacy businesses are able to be there. So we were able to help them acquire that building, and now they're in the process of a $8 million fundraising campaign to
Wow.
rehab that building into a permanent location. And these are two people who had no experience with real estate, no experience with funding. And so for me, I think that's what it's all about. And in fact, Tanisha, I was going to say to you, as I looked at, the commercial builders network and what you do, I really appreciate how, on the one hand, you highlight individuals and, what they're doing and what their role is in entrepreneurship and commercial real estate and how they fit in. But you also do a good job of bringing it back to how does what you do impact the community. And I think those are the two things
Yeah.
that go hand in hand. And so that's why that project is special. And again, that's why I like, what you're doing.
I appreciate that.
Yeah,
Thank you.
sure.
Oh, you make me cry a little
Oh,
bit.
don't do that. Hey man, we gotta recognize when people are doing good work, because the world can be
Mm,
hard, right? And there's always
yeah.
like forces that feel like they're pushing against you or something else, that
Mhm.
could be going wrong. Or just that everybody's so busy they don't acknowledge what you're doing, right? And not that you're
Yeah.
doing it for the acknowledgement, but no, I think it's important for us to support. And again, I think that's why I do the work I do. Having been in the for-profit world, having been in the development world, to come back and work for a CDFI that's really focused on providing resources in the terms of both funding and education to the community is important, right? We It's important for us to build this ecosystem ourselves and not always wait for somebody else to come in and save us and do it.
And that's literally what the podcast is about, because I have a heart for my people.
I
Why?
love
I don't know. I don't know. But
It can be hard sometimes
it
now.
can
I
be
ain't saying it was
hard
easy.
sometimes. No, it can be hard, but I love my people, and I just want to see ourselves thrive. I just
Mhm,
want us to see our own power. Like if we
mhm.
knew, like we're a threat because people know if we knew who we are,
Right,
my
amen.
God, how much further we would be. So how do
Mhm,
we build our community and work together and build it on our own, by our own, because we have a lot of brilliant people, which
mhm,
is what I'm showing on this podcast, a lot of
absolutely.
brilliant Black people. And then
Mhm,
we also have those who actually have the skills. How do we bridge the gap, build the trust amongst our community, and work together.
Oh my
So
God. Is that a question you're asking me?
I don't know. I think I just went on a little tangent.
I was about to say, because that's gonna have to be rhetorical, because I don't have an answer for that
Yeah.
except to continue building the ecosystem, recognize each other. One thing I've learned in doing deals, and I think one of the questions you sent me in advance was something about like did something go wrong, or what's a mistake that you made or something to that effect. And I think one of the mistakes I made in terms of what we're talking about is this. I have an idea, let me pull everybody along because it only makes sense for them to be there, right? And that's understandable, but it's almost impossible to pull everybody along. It can be impossible to change people's mindsets, but what you can do is find people with a like mindset and then
Mhm.
figure out how you can work together. And I think that's how I really work. So, there's lots of people I would love to help, but then who are the people that I can help that are already in position? And so now we're lifting each other up. And then maybe once our cup becomes a little bit more full, then we can pour out and give to others. But for right now, it's, who's working. And so in this development space, in this entrepreneur space, who's successful, right? Who's out there
Mhm.
doing it? And what are we doing to have meaningful, purposeful conversations like this? Or what are we doing as, like, putting mastermind groups together and really talking about solving issues? Um, and it can be challenging because we also have our lives, right? We all got to go to work, get paid, do our own thing,
Mhm.
take care of our family. But it's this bigger thing. And one of my mottos is let's build something together. And maybe that actually means me and you partnering on a deal, but maybe it just means us understanding what that finish line is and what that goal is, and us each playing our part and then helping the other person play our part, which is, maybe I'll refer something over to you, maybe I'll bring you in on the deal, or something else so that we can build something together. But I think that's the only real way to really, take care of ourselves and our community and build it is to really work together.
Awesome, awesome. So I know a lot of contractors feel stuck going from job to job.
Mhm.
What should their mindset shift be when it comes to either funding or development projects to keep them out of that rut and stay over afloat?
Yeah, that's a pretty good question. And again, when them I wish I had a perfect answer. I think honestly, man, I think sometimes we think too small. I
Mm.
really think that, like, if I could just find somebody to give me, $100,000, I can get this deal done. Or if I could just, go build this house, I'll make $50,000. Or if I can go do this small thing just enough. And I know when I go to the bank, I really need, a $500,000. But if I can just give them to give me 50,000, I'll get it started. Um, One, if you're doing stuff like that, whoever you're talking to is not going to really believe you know what you're doing, because whatever you're doing should cost more. But the amount of time that we spend doing those little projects is the same amount of time that we spend doing bigger projects. And so it's, determine where you really want to be and look at scaling up. And so, it's a fact that in the banking world, it's way easier for you to go get a $5 million loan than it is a $500,000 loan. And, that would seem kind of, it don't seem like that makes sense, right? Because it's less money, but it also means there's less room for risk. There's less opportunity for a bigger reward because, your project's smaller. So I think one of the things I would say for people who are trying to get bigger is, one, look at bigger projects. And then two, don't be afraid to joint venture and or find a mentor. Even if that mentor costs a little bit of money, right? So you still could make 100% of whatever you're making. You can make 100% of this $100,000 you're making, or you can figure out how to make 75% of $1 million and, help somebody else make some money too. So I think it's that. And then really the joint venture space, I think allows you to scale up, right? So, you might be able to provide some services, somebody else, you spread your risk because you're doing multiple projects. Um, and then I think at the end, and really what I think, especially as you get beyond this, I'm not a startup entrepreneur. I'm not a startup developer. I have some experience, but it's time for me to really scale. I think people have to start looking at creating their own equity funds, right? So where do I have money that I know I can go tap into? And, going back to our earlier conversation, we don't always have friends and family that we can tap into. And, in our community, if we are going to find equity funds and we have to go outside of our community, it's going to cost, right? Those people are going to charge you more points for your deal. They're going to want more control over your project. They basically going to make it theirs. And, because you don't have the ability to do it yourself. And so I think people should really spend some time thinking about, how do I raise this money? And am I better at raising money than doing a project? And maybe I should go and, find the money for it, and I'll support somebody else who has a really good project. Or I'm really good at this project and let me go find somebody that has the money. But at the end of the day, I think, going back to that same ecosystem of people who are already working, I think pool your money together and becoming your own equity source. And that allows you to not be controlled by as much as by somebody else. It allows you to move a little bit quicker. But again, that might be a little bit more sophisticated than for some of the people out. Because what I don't want is those same people you talked about that like went to TikTok and they figured out they can buy a house with no money down, and now they're going to go raise $1 million or $15 million from their friends and family by like, that's a whole thing that you don't want to get involved in.
Yeah.
So, and again, I think the last thing I would say is rely on your experts, right? Find you an attorney that's experienced, find you a CPA that's experienced, because they have more knowledge than just what your deal is. They've seen other deals, they know what works, they know who has money, they know who's looking for projects, and they can help you kind of take some shortcuts versus trying to figure everything out yourself.
That's good. And I know you said something about mentors. Is that
hmm
something that they can find at your CDFI with those trainings, the mentor? Like, we need somebody that's trustworthy, actually has real experience, not one of
Sure. I
these
mean,
internet coaches that did one or two deals.
right. And so the way we design our actual program, that developer cohort that we talked about. So I had 15 people in the cohort, and then I reached out to experienced developers to see if they want to be advisors. And so we actually had some funding available where our organization was to pay, was able to pay more experienced developers, basically a consultant fee to come in and advise people. Um, Although I think you could do this without money, it's really just about creating spaces where people can come together of a like mind and have a conversation together and solve problems. And I think that's the greatest thing I've seen come out of our cohorts is you've got all these people who would any other time be on their own job, be on their own site, doing their own thing, trying to solve their problem by themselves. But being part of a group, whether it's our cohorts or it's Project Reap or it's ULI or any of this other stuff, forces you to be around other people who are really just focused on the same thing that you're focused on. And so I think, yes, we would have we assign people official mentors. I think you can find mentors without being so official, like, or at least not having to go through a cohort. Is join an organization of people that are doing what you want to do. So if you're an architect, you go join an architecture organization. If you're a real estate developer, find your local real estate development club, and then watch and see and talk and make friends and see what's going on, and find people at the bank and ask. But yes, I think it's imperative. In fact, I know even for myself, with the opportunities I had from that very first quadruplex, is I could probably be 10 times wealthier had I found a mentor a long time ago that told me, Tommy, you don't have to sell this particular property. You can keep that and refinance or take this money and instead of going living a life up in Atlanta, and that with that extra money you get from that
Hmm.
apartment, take that apartment money and stack it to the side because you wouldn't have had it anyway. So just somebody to tell us that. And I think, I think what we're talking about is good for all builders, but particularly when you're talking about Black and brown people, we don't, have those resources, don't have those mentors. And no matter how smart and good we are, we don't have that depth of that field of people that we can go to normally, at least not in our family. Some people are
Hmm.
exception, but for the most part,
Yeah.
we don't have that. So it's, where do you find those other people who are like you, and how do you support them and then get them to support you?
Awesome. Now, because you understand the real estate development side and banking,
Mhm.
for those contractors who are just doing the work, how do we transfer them? Well, how do we transition them? There we
Mhm.
go. Into becoming owners of
Mm.
these properties and yeah, leaving their own legacy.
Oh, that's a hard question because sometimes I don't understand how contractors or realtors or other people who are so close to it don't. But some of it is still that same thing. And particularly when you're talking about a contractor, they have a very limited site, no matter how good they are, if they're an electrical contractor or even a GC, they're really focused on that piece. That funding, that financing piece is not something that, they see all the time. So I would encourage them again to find a Project REAP, to find something else, whether it's our programs in our market, because Capital Impact is in those markets that I talked to you about, but Reinvestment Fund is in other markets. LISC, which is another organization like ours, are in different markets. So CDFIs have different markets, and there's a lot of people. So I would definitely say find that education. If they're doing work, if they're working as a contractor, there's a pretty good chance they should have a relationship with a person who owns a property. See if there's ways that they can partner up with that person on the next deal, and maybe, defer some of their fee that they would get from doing the work and leaving that in that deal as equity, so they can start becoming owners and having more say so in that. Um, simple stuff. If you don't own a home yet, go find you a NACA or somewhere else where you can buy a house with no money down, and now you got equity in a property that you didn't really have to pay for. And then those SBA loans too. I don't think people take advantage of them enough. If you're a small business owner, you mentioned the 7(a) loans, you can go get your line of credit. It has to be business related, but that business might be very well going to buy your property. You asked me about products. Capital Impact has an outstanding product for business owners that will fund up to 95% of the purchase price of whatever building they want to own, as long as they occupy roughly 40% of the building or more, right? And so
Wow.
you're a business owner, whatever that business is, whatever it is, you go buy a piece of property, you buy a strip center, as long as you cover like a third of that or a little bit more third than a third of that, you could buy that 95% loan to value, so 5% down. Now you own this piece of real estate, and now you have two additional tenants. And even people that are developers, or let's say you're a contractor and you've got trucks, right? So, and I see them in my neighbor's yard sometimes, right? They're a contract. They have 4 or 5 vans parked in their yard because they don't have an office space. Makes sense, you're
Mhm.
saving money. But if you can find a program like that through a CDFI, because if you go to a bank, they're not giving you 95%, but CDFIs will. Um,
Mhm.
Go buy a piece of property, start building equity up in that. Use that equity for your next project, and use that experience and going through that process as part of your experience to do deals. But yeah, other than that, I say if you want to grow, find you a business partner, and then don't be scared. Like, just really know your stuff. So stay in your lane and don't jump out and be like, I want to be a developer because it's sexy, but I don't have the capital and I don't have the experience. Because what you're gonna do is wind up losing money and wasting time. And you might really just be better off becoming a true subject matter expert. And even if you do that, there's opportunities to partner with municipalities who might have an RFP out because they want to build something, and now you can go use your expertise and go get on somebody else's development deal without becoming a developer, and go through that process and learn it, and then be able to take those skills and resources and access to money to go do your own project.
Awesome. So for Swann Development Partners, what type of projects do you focus on mainly?
So the way it really started was I was really just building my own portfolio of single family homes, right? So whether it's some of them I buy and hold and retain for rental income, some of them I do fix and flips, and from that it grew a little bit more to like urban, I call them urban retail centers. So again, a little strip mall that you see here or there, and that was mostly just because again it's just me and my capital and my money. So that's how it started. As it's grown, it started to be more of a place that syndicates deals. So, helping other people put money together. And it's still really retail deals. Because what's important to me in real estate development is our communities, right? It's really going back in the city. For me in Atlanta, is really making sure that, our legacy that made us a great city, we can still be a great city and support the people that have been here in our community the whole time while we continue to grow economically. And I think that, if we're relying on people from outside the community to come in and make those investments, then they're going to put in what they like to see in that. They're going to change that. So when I'm looking at projects, I'm evaluating them based on like, how does this play into our community? Who are the owners of it? What does it build on? And then how can we build your wealth? So I spend a lot of time doing consulting right now for other people too, to make sure they can find their own funding and find their right strategic partners, and really just just make sure their business is growing better. So that's kind of how Swann Development Partners evolved. It went from me just worrying about myself and, taking these houses and doing all of that to really just, again, doing the same thing I do in my day job, is advocating for people in the community and helping them find funding, and helping them maybe avoid some of the pitfalls that I've seen other entrepreneurs fall and other developers fall into, where they're losing money.
All right. So, consultant slash mentor,
I like it. Slash,
so
slash
slash
investor,
investor slash.
slash advisor, slash
Yes,
cheerleader. I call myself a cheerleader a lot of time, because it's like, yeah, I want to see you win, and how can I see you win, and what does that look like? Yeah.
absolutely.
Mhm.
So you were named in 2021 one of Atlanta's most powerful leaders. What does leadership mean to you?
Um, I think I think leadership means, one, I say resiliency, right? Because a lot of things go on, and you can have this idea like, I'm going to do this, and then something happens and you're stopped, and so that stopped everything that was involved in that. So I think resiliency is important. Um, Advocacy is important as a leader, and it's not only advocating for beliefs, but it's advocating for people. How do I make sure that people who aren't here in that room are still taken care of? How do I make sure that, that what we're doing is for the best interest of everybody? How, a rising tide lifts all boats. So I think leadership is about not being selfish, not necessarily having to have that spotlight on you, but using your platform and your ability and your resources to help the people around you and to make the things around you better. And so I think that includes, being innovative, coming up with new ideas. That includes standing up for people that, can't stand up for themselves and do it. And then just really being able to influence change through ways that make sense. So doing your homework and being logical and really knowing what you're talking about, and not being so focused just on, money or title. Um, yeah, I think that's probably the best way for me to explain my thoughts on leadership.
Awesome. So, what piece of advice would you give to somebody who feels discouraged or overlooked in this industry? May feel like they maybe shouldn't get into it, or maybe should not stay in it.
Yeah.
What's some advice you had to about perseverance and your resilience?
Um, so the first part about, like, if you're feeling overlooked or discouraged, it's like, do the work, right? And the work has to be about the work. And I don't care if that work is about, I'm Tanisha and I'm gonna make myself the most successful podcaster in the world. Okay, do the work to be that. Don't be like, oh, I just put up a podcast and it was cute and I don't know why I'm not the most successful. What research did you do? Did you send your guests questions ahead of time so they know what you're talking? You know what I'm saying? So do the work, and then the rewards will come. And I think you're gonna be discouraged. I think you have to look at why you're discouraged. And if your discouragement comes from, I didn't get enough praise and nobody recognized what I did, then this really might not be the thing for you, because you're not trying to do the work. You're trying to get this kind of recognition. Now, if the
Right.
discouragement comes because you've actually tried something and you've had, some failures, and you've got it and you're passionate about it, you just can't understand why you're, kind of failing. It is, do the research, find some friends, find a mentor, find some people that's like you. It's really interesting. Now, I'm college educated. My friends are great, but my friends who are not entrepreneurs and who are not developers don't understand, right? They won't
Right.
understand, and they may see me buy a piece of property and think it's so great, but not knowing what has gone into getting that, right? Or knowing that, just because I bought it, here's where the problem started, because now I got to pay for it.
Right.
But if I surround myself with other people who are going through the same thing, I had a conversation, and there's no jealousy, there's no like, well, why hadn't you figured that out type thing. There is, okay, how do I help you build up? So I think that's the best way to don't worry about, you'll be seen once you'll be rewarded once you do the work. But start off by doing the work. Don't be discouraged. Find your group, but be realistic, right? If you want to be a developer may not be your thing. You may really be good at being that plumber, and you might really be able to build a hugely successful, profitable business by staying and focusing on what you're doing and not trying to do with somebody else. And so I guess in that part, I would also say learn to play your part because everybody has a part. And when you play it really well, you become successful. When you're trying to play somebody else's part, you're not going to do well. They're probably not going to do well. And you're probably not going to get along because, there's this fight for power. But figure out what your part is and do that.
What is your ask? How can we support your business?
Um, Well, first, I think you yourself are supporting my theory, right? Just in what you're doing, and as I look at the communities, because what I really am about is building communities and making sure that people that have been there for a long time, and again, I'm in Atlanta. I have a daughter that's at Howard, so I go up to DC and I
Oh,
see it
eat you.
regularly. Yeah, yeah, the other HU. Um,
The Institute?
Look, man, everything was going so well. We're not gonna go there. It's all HBC love. We're in public right now, so it's all
Absolutely.
HBCU love. Um, but really just going out to community. So that's the first thing that to do is to keep doing that work in your community. And then let's build something together. If you've got some questions, I'm fortunate to where I'm not out like searching for as many clients as I can. So telling people to call me, I can do a loan for you. Although I can't help you find a loan if you need it. That's not really what it's about. It's really just about, building that ecosystem. So if, what people can do for me is let me know how I can help them. Do you need introductions to somebody? Do you need some guidance? Do you need maybe more hands-on getting actual deals and projects done? And if that's the case, then yeah, maybe there's the ability for us to work together. So I would say that, but really it's just about building this ecosystem. I say anybody that wants to talk to me, feel free to find me. I'm really easy. I'm on LinkedIn. That's probably the best place. It's my favorite social media platform is LinkedIn because that's where the money is, right? That's where the money reside, right?
That's where
Is
the
what
money
they say.
reside.
That's what they say. So find me on LinkedIn. It's Tommy Lester, just like my name is there. I'm also on other social media platforms. That's not always business. It's always fun, but it's not always as much business there. But definitely do that. And then I would say, I have a new venture that I'm working on that I would love people to start. We're still in the early stages of the website, but it's called the Founders and Funders Club. And it's actually foundersandfundersclub.com. And it's really the idea that what I've seen, having sat on both sides of the table as both a lender and a banker and working for the CDFI over here, and then on this other side, doing my own projects, working with entrepreneurs, having gone to Georgia Tech where I work with a lot of people who actually started, have startups in technical areas, is there's a lot of people on one side that need money and they're trying to figure out how to go get the money and where to go get it from. But on the other side, banks and lenders and everybody else are always every day like, who can I lend money to? Who can I go take this money I have and invest in it? And so for me, it's going to be important to, start bringing those two groups together and then see what's missing. Is it just the not knowing who's who, because we can make those introductions? Is it making sure that the business owner is more prepared? Is it making sure that the lender has better products, that are better fit for the particular market they're going after? So you can find me Founders and Funders Club, just like it's spelled, foundersandfundersclub.com, or you can find me on LinkedIn and, send me a message on LinkedIn. I'll respond and would love to, have a conversation and see, where the synergies are. Maybe it's a deal right now, maybe it's a deal in the future, maybe it's nothing, but just see what the synergies are.
Awesome. Awesome. Well, thank you so much for your time, Tommy. It has been amazing.
Yeah, well, thank you again, Tanisha. And I said it before, but I really appreciate the work that you're doing. It's an honor. It's always a good opportunity to be on somebody's podcast and get some exposure. But to be talking to you and having seen your work and your again commitment to like this ecosystem that we're building, and knowing both the people in the ecosystem and then the system itself that the people exist in are important and how do they work together. I really see and recognize your work on that. So I appreciate you having me. Yeah.
Awesome. Thank you. Thank you.